Hi, thanks for joining me again. In front of you, you can see a chart of the Nasdaq 100. It contains a lot of the major trading stocks in the US at the moment. Stocks like Apple and Google, Microsoft, Facebook. It's a highly traded market. This is a weekly chart. And you can see right in the center here is the response to the coronavirus in late February. And you can see that price moved down quite sharply. It lost about 25 to 30% over a month. But there was buying to some degree all the way down. You can see there's a little tail here on very high volume. Down here you can see volume was very high. The next bar was up, closed higher. It does have a high tail, but you can see that price is likely accelerated lower, closed off the lows. The next week it's pushed higher initially, drifted lower and closed just off its lows. The fact that it actually closed higher suggests there was buying at least in the bottom of this bar and certainly some absorption in this bar. The next week price dips lower again, but there's a massive close off the lows on the highest volume so far. Then finally, the last serious down bar was a gap down. News would have been really bad at this point. Volume was at its highest during this period, and you can just see how high the volumes are compared to previous volumes. And prices closed below the low of the previous bar and looks bad, gap down, closed below the low of the previous bar on the highest volume. But that high volume should have been some sort of alarm bell. It was climactic type volume, really, really high volume. And although you may not have known at the time, price actually closed higher the following week. It did trade slightly below the previous bar's low and then accelerated higher in a buy the offer sort of fashion. Just clear that off. So there must have been some buying. In fact, likely there was quite a lot of buying in this bar. It was a climactic type bar. And the fact that price reversed and closed higher the next week on still quite high volume mostly confirmed it for you. This gap down bar actually looks more like this. That makes it a bit clearer. It would have trapped quite a few people in that bar. So if you draw a line across from where that bar began, this is this bar, where this bar began trapping people into a bad position, and the high volume suggests that they sold, or a lot of people sold, to get out on that bar on the bad news. When price then pushes above this level, all this weakness has been left behind. Price is now above it. All the weakness is left behind, and to a reasonable degree, price is free to move higher again. You can see in between there was a form of test. It's not a very clear test. It's perhaps more an absorption bar than anything, but there would have been some testing, at least in the lows of this bar down here. Remember, this is a weekly chart, so there may have been some daily testing. Prior to that was probably a buy the offer up to the resistance, and then some testing as price came down into the end of the week. But once price accelerated higher and moved above that level, the weakness was left behind. We've identified there was likely some buying in these bars. even if it was only moderate buying. And that let price continue higher before there was some further testing. And price then accelerated higher. And you can see that it continued up, testing along the way up to here. You can see that there was a little period of consolidation here before price pushed out again, test, pushed out again. We come up to here, which is September. Now you can see from the lows, the coronavirus lows to September, price has almost doubled. It lost 25 to 30% in the coronavirus initial push lower, where there was considerable buying emerge, and then price almost doubled up to September. But this bar, you can see that volume has increased considerably, spread has increased considerably. Price probably accelerated up to begin with, then pushed down to the lows, and then closed in the middle. That would be the likely daily movements. Remember, this is a weekly chart. But there's no doubt activity was high. There was probably some bad news. I haven't looked back. It's the 4th of September. You can see here, 4th of September. You want to go back and have a look. There was likely some bad news for some reason, and prices moved lower in response. This is an obvious announcement type bar. Whether it was further coronavirus issues, a second wave, or a new strain, there'd be something, no doubt about it. So in response to a bar like this, you would rarely see price then continue unabated and move higher. Generally, when there's high activity, price closes lower, widespread, you will see at least some testing to confirm to the market that there's no serious issue. And you also have to remember the professionals in the market, they look forward to these type of periods where they can buy stock at a cheaper price. They can use the news to push prices lower and then buy at lower prices than were previously on offer. So rarely do the market professionals let an opportunity like this just pass. They will use this opportunity to further their own interests if possible. So we'll go ahead a bar now. You can see there's a down bar. Spreads narrowed considerably. Volume has reduced. Price has closed below the low of the previous bar. So that's a minor negative, but it's a negative all the same, and suggests that the market may continue lower or test. It's unlikely to accelerate higher from there. It's always possible, but because prices closed below the low of the previous bar, it suggests that the market has some intent on continuing lower. We'll go ahead another bar, and price continued lower. Spread remains very similar to the previous spread, but volume has increased considerably. There was likely some absorption in this bar. You can anticipate this because the volume is very high. If price needed to stretch lower to find buyers on all that volume, you would have had a bar with a much wider spread and a lower close, more like this. But you didn't get that. The spread was almost the same as the previous bar, but volume had increased considerably. Price did close barely level with the previous bar's low, so it's a little vulnerable, but I would estimate there's buying on that bar, and an up bar in response would likely confirm it, or a very narrow spread down bar on low volume to say that the sellers were exhausted, one or the other. If price stretches lower now, there's serious weakness emerged. So we'll clear it, and we'll go ahead one bar. Now, you can pretty easily see what's happened. Remember, this is a weekly chart. Below the low of the previous close was likely some daily testing, and the markets either bought off the lows or found there was very little selling pressure, and in response, prices accelerated higher and the markets bought the offer, pushed up and created an up bar in response. So there was buying on this bar. You can probably imagine that because volumes have increased over the last 4 days, that there is certainly some buying in this market, but the market's not going to push itself up too quickly. It's going to take advantage of the weakness that's emerged and probably the bad news stories that are circulating in the media, and they'll use this to their advantage. We'll go ahead another bar. Now this bar appears weak, but how weak is it really? You've got buying in the background, most likely on this bar, most likely on this bar, which are these two volumes. So although this bar looks weak, it's more likely an absorption bar with buying in the background. In response, you may get some sort of test bar, or if the market is getting really strong, you may find that price pushes up in response and closes higher. I very much doubt, with the buying that's emerged recently, unless something serious has happened to change the market sentiment, that you're going to get a down bar that closes below the previous bars and suggests serious weakness has emerged. Much more likely, you'll get a smaller test bar on low volume or a further push higher in response, which would confirm this as an absorption bar. We'll go ahead one bar, and you've got an up bar in response. An up bar, but on low volume. You can see volumes below average. Now, it's got reasonable spread. It's closed above the previous bar's high. So selling pressure has reduced, and the reduced selling pressure has allowed price to push up with a decent spread on low volume. This also is confirming the buying we've seen down here, and that this is likely an absorption bar. So we're seeing buying at least on this bar, and this bar now. This one's questionable, and there was weakness on that bar. We'll go ahead one bar. Volumes increased. The close was poor. The market's up adjacent to the previous highs. Now this may be an absorption bar similar to this bar, which would then allow price to continue higher like this. You could also see price come back. About 50% of the time, you'll see price come back and test the strength of the previous lows, especially when there's been considerable weakness around. This often gives the market professionals another opportunity to continue buying more stock, especially if the market is not trading favourably. So we'll go ahead a bar now. You can see a little bit of weakness has come in, but volume was below average. It doesn't seem too bad. Prices touched the previous highs. It's just come back and tested. It could continue higher here and attempt to break out, or price could come back to test the strength of the previous lows. It would probably depend on what was happening in the market at the time. If trading conditions were becoming more favourable, there may be an attempt to push out, that is higher. And if trading conditions weren't yet favourable and weakness was still present, there may be the opportunity to come back and retest the previous lows. We'll go ahead, another bar. Now you can see prices accelerated lower on increased volume. It's slightly above average. Price is likely now to be testing these previous lows for strength, just to see if the demand that emerged at this level remains intact and the market professionals are going to defend against any supply that emerges. We'll go ahead, another bar. Prices accelerated higher. That's a buy the offer for sure. You can see prices back up adjacent to the previous highs. This was an impatient type bar. The fact that prices closed clearly above the previous bar's high, which had above average volume, that's quite positive. Prices closed above the close of this previous up bar when the market was still in an uptrend. That's quite a positive bar. We'll go ahead, another bar. Now you've got a test type bar or an absorption bar really, because a test bar should have quite low volume generally. You may actually get a test bar following this little test bar in here before the market tries to push out further, or the market could just continue higher. It's in a good position now. If you just look, before I look at the next bar, notice this W shape. You'll see it regularly in the markets. This is an accumulation pattern where the market pushes lower. This is what Wyckoff called an automatic reaction, or he would just write AR. And what it suggests is that anyone who was going to sell did so as prices pushed lower, and this left a supply vacuum between where price was and where it finished. For a temporary period, there's very few sellers in this little area here. And this allows price to push up with relative ease because the sellers are absent. They've sold, they've gone at this level. Anyone who is going to hold remains holding. Buyers have bought in and absorbed that supply that came in, and this leaves a supply vacuum. It's only temporary. It'll be rebuilt at some later stage, but temporarily for a day or so, there's very few sellers at this level. This allows price to push up with relative ease. Then price comes back, tests the strength of the previous lows, and then the market pushes higher and prepares to break out. If you look at this now, it's actually looking more like some form of reaccumulation zone in here, where price has pushed lower, automatic reaction, retest of the lows, and now it's pushed up, getting ready to move higher. And just before we go completely, the inverse of that, when you see price moving higher, then it accelerates higher, comes back, retests the previous high, fails to exceed it. This is your classic distribution pattern. This is a classic accumulation pattern, a W. Here it is again. And this is your classic distribution pattern. Price accelerates higher. There's a lot of demand created in the market. Media is really good. Prices are going to the moon. Professionals are selling. The selling pressure causes price to move lower. The professionals generally hold the market up at this point because they've got more to sell. Price gets pushed up but can rarely exceed the previous highs. If it does, not by much, and then it fails quickly. Then price moves lower, and when it breaks below where price began to accelerate, price generally is considered to have broken down then. The drivers in the market have left, they've sold out and probably gone short, and the rest of the traders are trading amongst themselves with no driver in place, no one marking up the stock anymore, no one defending against supply like there was before, and the market tips over. And as more and more people realise that the professionals have sold out, the increased selling pressure creates like a domino effect, and price continues to move lower in response. And as more people sell, price moves lower. That puts more people under pressure, and the pain of the price moving lower causes more and more people to sell, and it's like a domino effect, like a snowball effect, and price continues lower in response. Okay, that was a happy story, wasn't it? So we've got likely a reaccumulation zone here, and you've got a test, not a very clear test, or an absorption bar right on the end there. You'd expect a test in response or a push higher. That would be the most likely response. We'll go ahead of bar now. You've got a little test. It's not a very clear test, not a particularly great test. Very narrow spread for a weekly bar. Volume was below average. A test bar, or test for supply, is a narrow spread down bar. It is a down bar. It's red coloured because it's down. Narrow spread down bar closing mid to high on low volume. And that pretty much achieves that criteria. Generally in response, as a confirmation, you would like to see an up bar in response, which would make that test bar successful, because test bars can and do fail. We'll go ahead a bar. We get an up bar in response. The test is considered a success. You can see that price is now, if it's not broken out, it's definitely on the way to breaking out. It's not a confirmed breakout yet. 50% of breakouts will come back, test the breakout for strength before price accelerates away or fails. So you've got a breakout bar. It's on low volume though, so that's in some ways we're suggesting that selling pressure is very low. Probably anyone who is going to sell has done so throughout here. There's not very many sellers in the market at the moment. Price is pushed out, but you do prefer to see a breakout bar with good volume. You'd like to see price accelerating out above the breakout line. This is the breakout line here. You really would prefer to see a good strong push out, but markets don't always operate in textbook fashion. We'll see what we get next. Next bar, the secondary up bar. You really have got a breakout now. The test is certainly confirmed, and it's more than likely that this was some sort of reaccumulation zone. You've got two up bars now. There was likely a little bit of testing below the close of the previous bar in there, and in response, prices accelerated higher. That's what you want to see, price pushing out with good volume. You might see a test bar now, or you might see a further acceleration. We'll go ahead another bar. You've got a test, volume has reduced, which is what you want to see when price pulls back. The lower volume suggests that there is no great amount of supply in the market. We'll go ahead another bar. You've got another up bar with pretty high volume. It's a little bit of a concern considering spread wasn't very wide. You would have preferred to see a much wider spread. Perhaps more like that with that much volume. So you could certainly look for a test on the next bar or a serious push higher, because the volume exceeded the spread. Spread and volume generally move hand in hand. Narrow spread, low volume; wide spread, high volume; average spread, average volume. When you get an anomaly, you need to sit up and take notice. So we'll just take notice here and see what happens in response, because it's always a response that'll tell you what's going on. And you've got a classic test bar, almost textbook perfect. Here's the breakout line. There's too much volume on this bar. So in response, the market has tested for supply. It's probably spent the whole week below the close of the previous bar. You can see that it traded inside the range of the previous bar for the whole week as an inside bar. And volume was low. Now, in hindsight, you'll probably say that this bar was a whole lot of people in the market who have now realised this is a reaccumulation zone. There's been lots of buying on these bars, and in response, they need to buy themselves and get themselves back in the market, especially if they were one of the sellers down here. So this high volume bar here may have been some latecomers realising what's happened and realising they need to get back into the market. In response, there's been a test. Supply was very low, and the next bar is a little narrow spread up bar. A little bit disappointing, really. You would have expected perhaps a bit of a higher push higher, but perhaps market trading conditions weren't favourable this week. The response higher suggests that this test was successful, but it wasn't a very clear up bar. I can only suggest that perhaps trading conditions weren't very favourable in this week, but price did close higher because the test was so beautiful and perfect. And that makes the story on the buying of this bar make sense as well. So perhaps we'll get an acceleration higher on the next bar. Now the next bar shows some clear trading below the previous bar's close. You may have found some testing in that bar perhaps earlier in the week, and either there was buying in the bottom, perhaps these people continue to want to buy the market. A little bit of over-enthusiasm at the end of the week saw price close higher on increased volume. It would be something along those lines anyway. We'll go ahead another bar. You've got a narrow spread down bar. Volume was a bit high. The close was low, but it was comfortably within the range of the previous bar, so there's no serious issue there. I'll guess that it's an absorption bar, and those who have been buying here and possibly here were continuing to absorb stock here because they missed out here. That's how I would read the story at the moment, and that would be my story until I was proven wrong. Next bar sees price accelerate higher. Price closed easily above the previous up bar's high on a little bit below average volume with about an average spread. There's no volume spread anomaly, and the lower volume suggests that there's very few sellers in the market. That's because what sellers there were probably bought on this bar, and that bar, which corresponds to this volume, and that volume. And once again, I'll keep with my story that it's the people that missed out buying during this reaccumulation who are now buying whatever stock is on offer at these levels, getting themselves back in the market. Go ahead, another bar. You've got a down bar with a wide spread or a wider spread. It's closed just within the range of the previous bar. Volume is excessive. Volume is higher than you would like to see. You would need to see the response to understand what might be going on. It's unlikely that anyone who was buying in here is dumping their stock. There must have been some sort of news or announcement in the market that's put people off for whatever reason. We'll see what the response to it is. Now you've got an up bar in response on reduced volume, so whatever it was, the market got over it in a week and pushed up. It's closed level with or fractionally above the previous bar's high. Remembering, if there's weakness, if there's true weakness in this bar, once the market gets back above it, that weakness has been left behind. It's below the price. It plays no further part unless price comes back to it at a later stage. So I'm always looking to see if a bar closes above the previous bar's high, within the previous bar's range, or below the previous bar's low. And you can pretty much say it's positive when it closes above, negative when it closes below, and neutral when it closes within the range, as a rough guide. The volume often makes a difference as well, but as a rough guide. Price is accelerated higher. On lower volume, it's average volume, but it's reduced volume compared to the previous bar. The market appears to have gotten over its issue, although there is still some concern on this bar that supply was drawn out for whatever reason. So we'll just keep an eye on it and see what happens as we move forward again. Next bar is a narrow spread up bar on low volume. Volume is below average. Price was narrow spread. Price is now above the previous bar's high. There wasn't very much demand in that market. Buyers have stepped back for sure. It's not a classic no demand because you don't have any obvious weakness in the background. There was some selling pressure on this bar, so we might be able to call that some form of weakness, but we'll see what the response is. There was a lack of demand in the market, and that's shown in the volume being below average. We'll go ahead another bar. You've got a test bar, hasn't drawn out much supply, volume was lower than the previous bar, and it's closed adjacent to its lows. You are getting the feeling that supply was drawn out here, or at least some. There's a lack of demand in the market, but selling pressure at this point wasn't too serious. So we'll see what the response is, whether the market can continue higher or whether it's going to come back. And prices come back with increased spread and volume. And now price is trading back level with the previous two down bars. This is previous support in the market. And prices come back, it's trading adjacent to it. Volume was pretty high. You'll need to see the response next bar. If you get an up bar in response, then the market's not really taking this seriously. But if you get a down bar in response of some description, then the classic level for the market to move to would be the old breakout line from this accumulation. Here's the accumulation that we identified earlier. You would expect increased support at this level, and that support should last down to this sort of level. So you've got a zone here between 11,000 and 12,000 where you would expect to find some sort of increased support. So if the market is going to continue lower, it's most likely going to test these levels if it pushes below these previous support levels. Remembering all the way down, where there was a down bar that found support and price responded higher, these are minor support levels, but they don't hold anywhere near as much as this sort of level where there's been serious support in the market, and what I'm estimating was reaccumulation of some sort. This is a much stronger level. We'll go ahead another bar. Oh, no, we won't. That was Friday. Okay, that's where we are at the moment. Price is trading adjacent to previous support, and it may recover and continue higher. If it doesn't do that and price continues to push lower, it's most likely going to come down and test the breakout line from this reaccumulation zone. That would be my expectation. This is the reaccumulation zone here. Okay. Thanks for sticking with me. If you've stuck with me this long, thank you very much. That's my lot for today. Thank you again. Hopefully that was helpful. See ya.